Hi, this is Troy Eckard. I'm the CEO and manager of Eckard Land and Acquisition. Today's topic will be very pointed and should be a lot of value to those of you that are listening. For the last 10 years, we've seen a real estate boom in this country like we haven't seen in many decades. There are thousands upon thousands of investors who've accumulated real estate assets and continue to see the nice returns that real estate has generated since probably 2010. However, I'm here to tell you that's about to change. And what I want you to do is understand it's not being the bearer of bad news. It's called trying to figure out how you can protect yourself and possibly rebalance your own portfolio. So this message is going out to custodians who manage real estate assets on behalf of self-directed IRAs. It's for those that are in the financial services business to start thinking about and considering protecting assets that are in real estate by maybe offsetting that portfolio with complementary real tangible assets that may be able to provide you with a better balance to your portfolio. Let's talk about why real estate's about to find a very serious and true erosion to the values. First off, in this downward climate that we're involved in because of the coronavirus, you're starting to see rent rolls start to have delinquencies and failure to make payments. You're going to see landlords starting to experience a major reduction in their net operating income. You're going to see mortgages default. You're going to see commercial borrowers not be able to pay their payments when you have large corporations like Staples or Cheesecake Factory say we're not paying rent. That sounds like it's not that major, but you multiply that times thousands of tenants, and what you end up with is you start to see an erosion in the value of real estate. So I think the net operating income, I believe that the tenancy, the vacancies, I believe the amount of downward pressure on actual value from cash flow and real estate values has already commenced. Most real estate investors are fully unaware of what's taking place. They absolutely are in denial. We have investors of our own that we talk to every day that started about 3 weeks ago making comments and realizing that rents weren't being paid and vacancies were starting to happen. This is only the beginning of what you'll see over the next 12 to 24 months. So not to put fear in you, but it's time to start paying attention and figure out what do I do about it. So one of the things I'd like to talk about is what we do for a living, which is oil and gas mineral rights. Now, mineral rights are real property. They're real estate, just like you buy a lot or a building or a duplex. They are actually titled land. You buy specific, legally titled and described parcels of property that have mineral rights. What you end up doing is you own the minerals under producing wells that are managed by major oil companies. That's what we do for a living. What I'd like to talk to you about is what are the advantages of minerals versus traditional real estate? Well, there's many, but I'll try to highlight the top 4 or 5. First and foremost, with a mineral acquisition, you pay a price per acre. 1 acre of minerals is worth $6,000 up to maybe $20,000 in acquisition price. The advantage versus real estate, I have no ongoing cost. I have zero holding cost. I don't have a mortgage. I don't have interest payments. I don't have tenant improvements. I don't have property tax. I don't have maintenance. I don't have liability of somebody tripping and falling. I don't have insurance cost. In other words, the traditional holding costs that are associated with normal or what I would call standard real estate, such as rent homes or apartment complexes or commercial property, those items do not appear on the balance sheet for a mineral owner. It is a net income asset. When I buy my mineral acre, major oil companies go out and drill their wells, and I end up getting a royalty payment. I get a net income check every single month for the oil and gas that's sold underneath the wells I have. So my biggest job for the month is to walk out, get the green envelope, open it up, and find a check in there from some oil company for the amount of oil and gas they sold off my minerals. The reason why minerals are so under-familiarized or not familiarized with investors is this market really opened up about 5 years ago. It opened up because of the success of the oil and gas companies in this country. They found literally there's 10 to 50 million productive mineral acres in the United States, and it now has become a tradable market. Many companies out there, like ours, have completely avoided minerals because they didn't make commercial sense. That market changed 5 years ago. Now, where you see a real estate market the last 10 years booming and busting, it's about to start to take its downward spiral. Whereas minerals today are the exact opposite. Minerals have come down the last 24 months, and they're at the bottom of the market. So now let's talk about why I believe minerals can do better than real estate. Going forward, real estate is going to have to figure out how they adjust their rent rolls and their rates as a result of lack of demand. They're going to be forced with the same continual mortgages, the same insurance costs, the same cost of maintenance. However, with minerals, buying at the bottom of the market, it's all upside from here. Whatever oil and gas is being produced today at $20 a barrel, in 2 to 3 years, we'll be paid $45 to $70 a barrel. Automatic increase. Along that path, minerals will not have any expenses to bear. It doesn't matter what happens to the oil company. We're at the top of the food chain. Mineral owners get paid first. They get paid every month. They have no deduction for expenses, and they get paid no matter the production from the well. So no matter what's sold, we get paid a percentage. Generally between 15 and 25% of all gross revenue gets paid to mineral owners. Now, when we talk about why we should buy minerals or look at minerals now, let's talk about it from a real estate owner's perspective. If I own real estate, I built up this nest egg. I've kind of got these assets. I bought it for $200,000 for a duplex. Now it's worth $250,000. The income's been really good. I'm making a 9 or 10% yield. The fact of the matter is that even if you're getting a good yield, you're now going to start seeing delays in rentals, defaults, mortgage payments stay the same. It's going to become a much higher risk investment as a result of the market from the end user's perspective. The difference is with minerals today is that the only minerals being sold are by those mineral owners who are desperate. The people who have went out and borrowed millions of dollars to buy minerals with anticipation of selling them at a higher price now are finding themselves selling premium Class A minerals for a third of the price they offered even a year ago. You're finding traditional mineral owners who've owned them 2 or 3 generations in their families are forced with financial decisions. They're saying, you know, Grandpa Jones gave me 300 acres of minerals. I now am forced with trying to pay off the farm or the tractor or put my kid in college or simply survive on that income for the next 3 or 4 years until this whole economy gets back on its feet. I think I'm going to sell 30 acres of my minerals out of the 300 in order to get cash by selling off one of my assets. Well, there's not very many buyers out there buying minerals in the market today. So whoever can put together with their expertise and experience the ability to buy premium Class A minerals is now leading the pack for owning what are going to be lifelong assets. These assets, these types of minerals, can have an economic life of monthly revenue for as long as 25 to 50 years. So why minerals? Why today? Let me give you the 3 reasons. 1, it's real property. It's a real asset. You own it just like any traditional piece of real estate. It's recorded in the courthouse. It is a transferable real piece of property. Number 2, no surprises. I don't have any capital cost. I have 0 expenses, 0 exposure from liability. All I do is buy my mineral acre, I sit back, and I let one of the major oil companies send me a check every single month. This is an investment that has 0 responsibility other than your enjoyment of the revenue that's coming from it. The last thing you have from minerals at this point in time is the fact that there is a flood of minerals being offered in premium properties, and there's no buyers. Most people, most wealthy investors, most people who qualify to invest in minerals, 1, don't know about them, don't understand how they work, and they're not exposed to the ability to access those minerals. Well, if you find a company like ours that actually knows how to buy minerals, have been doing this for 35 years, you now have that one secret ingredient to building a successful mineral portfolio. You have expertise, you have experience, and you have somebody that's in the business, has been in the business, and knows what they're doing. As a custodian, as a financial advisor, as a financial planner, as a CPA, as an estate planning attorney, you owe it to yourself to find out about minerals. You owe it to yourself to investigate this asset class. And when you compare it side by side to traditional real estate, it's time to balance your portfolio. It is time for you to take a look at adding minerals to offset what you're going to see as losses in the value of your real estate and the losses in your income from your real estate. Today is the day to balance your portfolio. A cornerstone of your portfolio should always be minerals that are cash flowing with major oil companies as your tenant. I'm Troy Eckard. I'm the CEO and manager of Eckard Land and Acquisition. I hope you got a lot out of this because, quite frankly, it's exciting times for the mineral business. Thanks for listening.